You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 15th day of February, 2023. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. That's open from 9:30 a.m. to 11:30 a.m. Eastern. That broadcast is reserved for members only and those who are taking their 1-week free trial. If you've not taken your 1-week free trial, go to mytradingiq.com. Just click that button up at the top and the journey begins. Now, the afternoon broadcast is open to the public. That's everybody, everywhere on planet Earth with an internet connected device. There's 2 different ways to join this afternoon broadcast. I'll give you the best way first. Go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. You only have to do that once. Then what happens is every trading day going forward, you'll get an email roughly an hour before the broadcast starts. And at 12 noon Eastern, all you have to do is simply click the link in the email, and it will automatically log you into our platform. Now, I say that's the better way because it gives you access to the question box so that you can ask questions and participate in the discussion. Which brings us to the second way you can join the afternoon broadcast. Simply point your browser to our YouTube channel, which is youtube.com/CFRN. It's easy to remember because you already know youtube.com. Just throw in a /CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive every daily broadcast. Currently, on our YouTube channel, there's over 2,200 daily live broadcasts archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to really get to know who we are, because you can scroll back 6 weeks, 6 months, a year, 2 years, just pick days at random, listen in. What you'll find is a thread of connectivity, a thread of continuity woven through each and every daily broadcast. If you log in the first way, and you ever lose audio, because sometimes we have issues with the go-to platform, all you have to do is just jump over to the YouTube channel where you'll continue to hear the broadcasts. You'll pick up right where you left off, and you'll have pristine audio. So with that said, let's open with a word of prayer. Now, our discussion this week has been putting Jesus first. 5 days in Colossians. This is day 3. Today's scripture is 1 Colossians 9 through 12. I'm reading from the Message translation. Be assured that from the first day we heard of you, we haven't stopped praying for you, asking God to give you wise minds and spirits attuned to His will. and so acquire a thorough understanding of the ways in which God works. We pray that you'll live well for the Master, making him proud of you as you work hard in his orchard. As you learn more and more how God works, you'll learn how to do your work. We pray that you'll have the strength to stick it out over the long haul, not the grim strength of gritting your teeth, but the glory strength that only God gives. It is strength that endures the unendurable, and spills over into joy. Thanking the Father who makes us strong enough to take part in everything bright and beautiful that he has for us. Now, the Christian life is a call to walk obediently with Christ and increasingly bear good fruit from the inside out. And if you're wondering what good fruit looks like, in another letter to a different church, Paul describes it as love, joy, peace, patience, kindness, goodness, faithfulness, gentleness, and self-control. It's Galatians 5:22 and 23. Bearing fruit is Paul's call to the Colossians as they face persecution of various kinds and false teaching. This is also the call for you and me as followers of Jesus. As we walk forward, some days the sanctification process of growth may feel like a stride. Some days it may feel like a trudge. And that's okay too. The work of growing doesn't always feel good. Like gardening, fruitfulness requires clipping and pruning and hot rays of sun. But it is always for our good that God continues to work in us, continues to show us our sin, continues to convict our hearts, and continues to change our sinful desires to fruitful desires that please and glorify God. Even on the days that feel more like a trudge, may we remember who is at work in us, even through our growing pains and our faith, and that in Christ, God is the one who fills us with good fruit and gives us the power to joyfully walk in obedience with him, even when sanctification feels hard or slow. God calls us all to maturity in Christ, even when it's hard or slow, and by his grace, we do, and we will grow in spiritual maturity as believers. As Paul reminds us in another one of his letters, he who began a good work in you will bring it to completion. And friend, don't miss how this section of Colossians closes. The Father himself has qualified you to participate in all of this growth through his Son's work. You didn't qualify yourself to come into the blessings of God's family, where he helps his children grow in obedience and fruitfulness. Jesus' work brought you in. You're qualified because of him, and you'll grow because of him. That is good news. This is just another beautiful truth that proves Jesus really is highest and best, something Paul refers to as Jesus' preeminence. As we'll see in just a few short verses from now, you're qualified through Christ, and he's made it possible for you to grow by the power of his Spirit, the Holy Spirit. What a strong and beautiful reason to put him first in our lives. If you are bearing fruit today in Christ, if you're walking forward, uphill or down, Celebrate this. And then, like Paul, ask God to fill you with even more fruit and all the obedience you need to take another step. Join me in a word of prayer. Heavenly Father, thank you for the glorious gospel of grace and the wonderful truths that are contained in your word. Help us to abide in Christ and to live our lives in total dependence on you, so that we may be fruitful in the place where you have seen fit to place us. I pray that my brothers and sisters in Christ may continue to grow in grace and receive spiritual insight, so that they too may live a life that is pleasing to you. This we ask in the name of Jesus, the name in which we believe and pray. And everybody said, amen. All right, happy Wednesday. Hope it's a happy Wednesday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. We got split markets, which is never good for trading, not in the world of futures anyway. The Dow is down 149 points. The NASDAQ is up 10. S&P 500 is down 13. Russell 2000 up 7. No movers, no shakers, just a lot of erratic behavior. And you'll see that when we go to the charts. In the commodity basket, crude oil is down $1.42, trading 77.64 last. That's a drop of almost 2%. Gold down $18, trading 18.4740 last. That's a drop of almost 1%. And silver down 24 cents, trading 21.63 last. That's a drop of over 1%. In the Asian markets at the close, the Nikkei fell 100 points. Shanghai dropped 12. The Hang Seng fell 301 points, which is almost 1.5%. In the European markets at the close, FTSE up 43, the DAX up 125, which is almost 1%. The CAC up 87, which is almost 1.25%. So we had a red day in Asia, but it was a green day in the UK. And so far, it is a mixed Radio Wednesday here in the US of A. Now at 12:40, Michael will come on. He'll give us a recap of everything that happened this morning in the live training room. And then at 1 p.m. Eastern, we will begin the live stream on TradingView. You can watch that from here, or you can hop over to TradingView. You'll see the live stream. Click on it, and you can ask questions. Michael will be able to see them as he is trading live for a half an hour. Logic 247. For anybody that's new, that's our 24/7 around the clock E-mini alert service. But it's not just the E-minis. It's crude, it's gold, silver, euro, even bonds. Now the Globex markets open Sunday night at 6 p.m. Eastern, and they remain open till Friday afternoon at 5 p.m. Eastern. So futures trade around the clock. There is a 1 hour break every day from 5 p.m. to 6 p.m. Eastern. Today's the Wednesday session. That began last night at 6 p.m. Eastern. It will end today at 5 p.m. Eastern. Then there will be that 1 hour break, and then at 6 p.m. Eastern tonight, that will begin the Thursday session, even though it's still Wednesday night here in the U.S. Again, our goal is to provide the alerts, not so that you can just trade the alerts and not have to learn how to trade, but they are a training tool to help you learn to spot windows of opportunity on your 30-minute chart, so that when price reaches the window of opportunity, you're prepared to use everything you learn every trading day in the live training room to yourself take advantage of the opportunities that avail themselves. Since the markets opened Sunday night at 6 p.m. Eastern through 7 a.m. this morning, we'll have an updated recap this afternoon and then another updated recap this evening. But here's where we stood this morning at 7 a.m. when Valerie did the recap. 27 alerts issued, 3 never triggered, still waiting on 3. That gave us 21 actionable alerts, of which 3 or 14% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, in a very simple 3-step process that we teach all of our passport holders in their unlimited one-on-one mentoring sessions. Now, that $300 maximum risk is based upon the potential profit in a trade. You want to risk less than $300 when possible, and market structure will often give you the ability to do that. On the S&P, $300 is 6 points, so you don't want to risk 6 points on every trade, especially if your plan is to only get your goal for the day. In the ES, that would be 2 points. Okay, 2 points in the S&P is $100 per contract traded. So when you enter the trade, if your plan is to get out at the initial target, then you cannot risk more than the potential profit. Now, the potential profit is determined in each alert based on the entry and the final trade to target. On every long alert, the final trade to target is the weekly zone above. On every short alert, the final trade to target is the weekly zone below. Over the last 237 weeks, we've averaged 20% or less of the alerts being stopped out based on that maximum risk profile that I just explained. And remember, you never want to risk more than the potential profit you see in a particular trade. And once you enter a trade, if you're going for the long haul, if market conditions, if market structure changes in the middle of the trade, then you exit. But of course, that's all taught to you, not only in the room in the morning, in the live training room, but in your unlimited one-on-one mentoring sessions. Now, the logic alerts, as I say, come out around the clock. It could be 2 a.m., it could be 2 p.m., as opportunity presents itself. And the logic alerts are based on current price action. Now, even though the logic alerts are based on current price action, they are issued with time built in for you to receive the alert, go to your 30-minute chart, see the window of opportunity, and then be prepared to use everything you learn in the live training room every day when price reaches the entry point of the alert, whether it's a long trade or a short trade. Now, our original alert service, the concierge trade alerts, they are based on historic price action. And they don't come out around the clock. concierge trade alerts, or the CTAs, are published shortly after the Globex open each evening. Last night was later than normal, 9 p.m. Eastern, when this static report is published. First thing you want to do is go to whatever market you trade. We use the ES as an example. You want to make note of where price is at this time on your 30-minute chart. And then you want to draw a line in the sand here and a line in the sand here. Those serve as great visual cues as you're watching your 30-minute chart, looking for the window of opportunity where you will then use your smaller time frame to execute. It's also where you'll use Logic 247 and everything you learn in the live training room every trading day to yourself find opportunities to be long or short the market. Our goal for you is to see you become self-dependent. In other words, you need to get to the point where you don't need anybody other than the chart to tell you when to get in and when to get out. Once you understand how to read price action on the chart, and once you understand what the indicators represent, once you understand what a window of opportunity is, then you'll be able to do exactly that. And with that comes incredible freedom. So when we go to the charts, you'll see the lines in the sand that I've drawn, okay, at each one of these numbers. First, we'll start with the daily chart, as we do every day. Why? Because institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Institutional trading is what moves price. Their accounts are denominated in hundreds of millions and billions of dollars. The average retail trader has an account in the thousands or perhaps hundreds of thousands of dollars or tens of thousands of dollars. I'm sure there's some retail traders out there with $100,000 in their account, but you know what? In the actual account you trade in, you should never keep more money in that account than you need for the size you're currently trading. Because in a runaway market, that thing can get wiped out. So if you've earned the right to trade 5 contracts, you don't need $50,000 in your account to trade 5 contracts. Keep enough, move it into a segregated account where it's safe and protected. Okay? Again, in a runaway market, your account can get wiped out. Never trade without a hard stop. That goes without saying. What we have here is price trapped between red and falling, which is resistance, and the step line, which is support. I published a chart this morning in the discussion group, and it looked pretty much like it does right now. We're in a really tight range on the daily chart. We need to see price get above red and falling, get above this high, and this high to open the door to higher prices. Now we've pulled back once, twice, 3 times, 4 times, really 5 times now to the BBC. When price pulls back to the BBC, it holds more often than it doesn't. That's not just true on the daily chart, it's also true on your 30-minute chart and any other larger time frame chart. So price comes down to support, goes back to resistance, back to support, back to price is always on the move. It's always looking for a weekly trading zone from the moment the markets open Sunday night till they close Friday afternoon. And so by spending just 2 minutes looking at the daily chart of whatever market you trade, whether it's the S&P Emini or Amazon or Walmart, Bitcoin, Ethereum, or the British pound, price flows the same across all markets and all time frames. But again, the institutions are watching these larger time frames. And what we've seen here is just a lot of indecision among the institutions. They can't seem to come into agreement. Over here, we had a nice move down, a leg, a retracement, a leg. We got above the BBC, we had a leg, we had a retracement, the pullback held, we got another leg, we pulled back and it held, and then we got a leg and a retracement and a leg, and a retracement that held, a leg, a retracement. Right here, price traded through. This was the standout candle because it opened and closed below the BBC, but we were right at the 38% fib retracement. That's drawing from the low to the high. At this point, it wasn't the 38% fib retracement. It didn't become the 38% fib retracement until this high was put in. We've been in a downtrend since March 29th of last year. We're still in the downtrend. We had reverse fibs on the chart for almost a year, and frankly, I just got tired of looking at them, and so I decided to take the reverse fibs off and just put regular fibs on. Okay? But as long as price is trapped here, now if we take out the low of the day, the next support area is the low of yesterday, and then the daily BBC. If price overcomes red and falling, then we've got resistance here yesterday, and then resistance here on February 7th, and then this resistance put in on February the 3rd, 2nd, February 2nd at 4208.5. Now the green line's called the BBC because it stands for bull bear cross. When price crosses below it, that's bearish. We anticipate lower prices. When price crosses above it, that's bullish. We anticipate higher prices. Lower prices, higher prices. Now even though the pullback holds more often than it doesn't, eventually price will trade through the BBC. And so then we go from an uptrend to a downtrend. But remember, in the bigger picture, from the high put in March 29th of last year to the low put in October 13th, we're still in a downtrend. The red and blue lines called the CFMA1. I refer to it as just red and falling, blue and climbing. When price is below the BBC, and you have red and falling, you want to be thinking short. When price is above the BBC and you have blue and climbing, you want to be thinking long on your smaller time frames. This is just extremely difficult trading. If you struggle trading today, man, that looks like a great long, and then it wasn't, or that looks like a great short, and then it wasn't. Don't beat yourself up too much. Okay, knowing when not to trade is as important as knowing when to trade. And the idea here is to have the wind at your back. And we have a conflicting scenario here. We spiked that red and falling, but then we closed below it. We opened below it. We spiked the step line a little bit, just like we did yesterday. Now we're just resting right on top of the step line, which will hold as support until broken. Now, everything I've said about the daily chart applies to the 30-minute chart as well. The vertical line on the screen separates today, Wednesday, from Tuesday, from Monday. See all these wicks? Those are some of the worst trading conditions you can see. And look at how flat this is. See, back here, this was a beautiful move up. We ran into resistance at the previous bearish cross. Whenever a bearish cross leads to an extended move, the first time price revisits that area, it will almost always be resistance. And it was, beautifully. We pulled back to the BBC, found support, and we almost made it up to the highest weekly zone for the week at 41.92/93, but we came a little bit shy. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. 70% of the time, price will consolidate when it reaches a zone. 20% of the time, you'll see rejection. And about 10% of the time, you'll see price slice through a zone like it's not even there. When that happens, price will typically retrace to the zone it sliced through, and then continue in the direction of the slice. And as you can see, that's where the market found support yesterday, and that's where the market found support today. The zone is 41.12/41.13, and the low of that candle was exactly 41.13. So here's where the market opened last night at 6 o'clock. The alerts, again, the CTAs did not come out until 9 p.m. We're below the BBC. We've got red and falling. So once you've been with us a little while, you shouldn't even need an alert to understand where price is trying to go. Price is always trying to get to a weekly zone. If price is above the BBC, it's trying to get to the zone overhead, where it found resistance. Pull back to the BBC, where it found support. Remember, the pullback holds more often than not. And so we get a leg, and we get a retracement to the BBC, and we get another leg, and we get below the BBC. And so the pullback holds from below the same as it does when it comes from above. Now we hit the short target multiple times. Again, you shouldn't have even needed an alert if you've been with us any length of time to know what you should be doing here. Looking for opportunities to be short because price is trying to get to the zone. Right now, price is below the BBC, but we're printing a green candle. And just above that is the step line, which is potential resistance. And then you've got potential resistance here, here, and then here. Price has to fight its way through all that resistance in order to get to the long target. The path of least resistance, when the market opened last night, was down to the zone, where we found support, consolidated, made a half-hearted attempt up to the previous bearish cross. And that's where we ran into trouble. And then the market dropped again back down to the short target. And again, and again. And now it's struggling. Now this candle finally took out that previous bearish cross. This one spiked it, but the market quickly reversed. Just like a bearish cross will provide support when price reaches it, a bullish cross or a bearish cross will provide resistance. A bullish cross will provide support more often than not. On the Dow, same thing. Market open, price made a beeline right down to the weekly zone. Now the zones are published Monday morning for our members at 6:15 a.m. Eastern. We've published the zones since December 14th of 2009. So when you become a lifetime member and have access to the zones every Monday morning at 6:15 a.m. Eastern, is you learn how to integrate those into your trading. as you begin to understand how price behaves around a weekly zone, they will become one of the most important tools in your trading toolbox. Price attempted to move higher, never lost touch with the BBC, so the pullback held. And then down we come, right to the short target. We traded through it. Actually traded through it twice. On the Russell, two-sided action. Just like the other indices, price came down to the zone, consolidated, pulled back, resistance at the BBC, supported, blue and climbing. Finally, the bears won and took us down to the short target. Once, twice, 3 times. Then price got above the BBC, and right here at the previous bearish cross, we ran into a little resistance, we spiked it, we pulled back right into that area, and it became support. And it took us right up to the long target at 1952. On the NQ was a snooze fest most of the session. It's now starting to try to get a little altitude. The high of the session lines up with this high from yesterday afternoon. Okay. Once the market identifies a major area of resistance or support, expect it to remain that until proven otherwise. So we're getting a pullback to the BBC. We expect the pullback to hold. It holds more often than not. And then that will give us a long opportunity up to the CTA long target. Really quiet sideways action last night for the NQ. Crude oil. We opened below the BBC. We had red and falling. The pullback held. And down we went, not only to the target, but to the zone where the market found support, just like it did yesterday. And you'll notice, where did the market find resistance yesterday afternoon? At the zone. There was a lot of consolidation. Then we dropped to the zone. Then we rallied to the zone. Then we consolidated at the zone. And then we dropped to the zone. And then we pulled back and we dropped to the zone again. We don't trade one market different from the other. We're not teaching you to trade a specific market. We're just simply teaching you how to trade. Once you understand how to trade and how to read the indicators, you can trade futures, individual stocks, crypto, forex, doesn't matter, because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. On gold, price attempted higher. You'll notice this high lines right up with that high. We got below the BBC and we dropped to the short target. And we dropped to the zone, bounced. We expect support. It gave us a bounce, but red and falling represents resistance. And so it's pushed us down, and we've been consolidating sideways now for quite a few hours. Price has gotten below blue and sideways. See how red and falling works? You've got price, the step line, red and falling, and then way over here the BBC. This pullback to the BBC held, this one held, this one held. Now we're below blue and climbing, which means blue and climbing could be on its way if price continues lower to turning into red and falling. On silver, same thing. We get below the BBC, we run to the zone, consolidate for a couple hours, and then make our drop to the short CTA target. We then trade through the zone, pull back to the BBC, resistance to support, to resistance, to support, to resistance. Now price has gotten below blue and climbing. If we take out these lows right here, then that will present a nice window of opportunity here. And if we can take out this low, we've got another nice window of opportunity right there. And on the euro, here's where we open. Down we go. Now right here, price sliced through the zone, pulled back, and then comes the drop. When red and falling is below the BBC, look for the short opportunity. Took us right to the target once, where we found support. Then price rallied up to the zone overhead, where we expect resistance until proven otherwise. It was good resistance. That sent us down to the zone. And now we're sitting at support that was defined 2 days ago. When the step line crosses over red and falling, that tells you price is going to attempt to pull back to the BBC. And that brings us back to the daily chart. And Michael, if you're ready, you can grab the screens.
All right, I am ready. Okay, here, bring them over here. And there.
All right, looks
All
good.
right. Great, here we go. All right, good afternoon, everyone. Today is Wednesday, the 15th day of February, 2023. If you have not taken a free trial with us, and you want to take a free trial with us, go here to mytradingiq.com. Right here it says sign up for your free 5-day training now, 9:30 to 11:30 Eastern time. If you're going to sign up for the free trial, you should go here and download the trading platform. Okay, whichever trading platform you use, you should just come in here and download it and use it during the trial. There are 3 of them here that we use. We have DT Pro, which I'm going to show you here in a few minutes, TradingView, which I'm going to show you here, and we also have NinjaTrader. If you have an account at NinjaTrader, you're going to have to give us your machine ID. Just watch the video. If you have an account with TradingView, you're going to have to give us your profile name. And if you want to start one up, or if you already have one with DT Pro, if you already have one, just go to the indicator store and download the indicators. If you want to start one up, start the trial there, then let us know, and it will give you an ID and a password. Okay, that is how you take the trial. Now, today we had, well, started off great, but we ended up with a blue day today. All right, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 15th day of February, 2023. Today we ended up losing 10 ticks in crude. We lost 1 tick on the ES, and we're break even on gold. That put us minus 112.50 on the morning session. Now, we did get the goal for the day this morning. 2 minutes, 1 trade. We got our goal for the day. Right, we're up $300 we're up $300 at that point. And we took a total of 14 trades this morning. So we had a lot of break-even trades and a few stop-outs. So on the month now, we're at $4,077. It's over 11 trading days, averaging $370 per contract per 2-hour trading day. That is 1 contract, 2 hours a day. I'm just going through the list of everything that's in here. Everyone who's in here, I should say. So we're averaging $370 a contract now. And on the year, we've gotten our goal in 30 out of 31 days, and this number starts over again because we have a blue day today. That was up to like 18, I think, but now it's back down to 0. We've gone 378 days since our last red day. That means 378 business days. So it's been since, I think it's September of 2021, since our last red day. What that means is we did not make $100, and we ended negative on the morning session. Now, on the year, that puts us at $12,410. It's over 31 days. We're averaging $400 per contract per 2-hour trading day right now. In here, if you were to quit trading when you got your goal for the day, and you were to add 1 contract a month, so far, pretty much, you would definitely have only worked 7.81 hours. If you added 1 contract per month and you traded 1 contract per month, every day so far this month, they would have been a little higher than 581, but 581 is where it's at with me. Okay, because half of the days so far this month, or 5 of the days I think this month, I did 1 contract in goal. So it'd be a little higher than that. But anyway, $581 an hour, not too hard to take. Okay. All right, let's get into the trades. Let's get into a couple of things first. put this back up here. At 1 p.m. in 14 minutes, we're going to be doing a live stream. Okay, that live stream is, you can get to it by going here to tradingview.com, click on community live streams like this, and just scroll down to where it says upcoming streams down here. It says upcoming streams right here. Click on this one right here and you'll be in there. It says 13 minutes. That's what I have left. All right, so that'll be at 1 p.m. If you're in here, you can just stay in here, but if you want to go over there and jump in that, that's great too. It's good to have numbers over there too. All right, now the trades. Let's start out with TradingView. Just trying to think of the fastest way, the most efficient way to do this. Let's start out with DT Pro. We'll just go over the trades that I did do on DT Pro. Okay, I didn't do much on DT Pro this morning. Nothing here on gold. And gold with DT Pro, gold did have a couple of trade opportunities, one here and one here. Nothing through here. Then we got into it again in here, nothing through there. It really didn't have a ton of trading opportunities today. The markets were just not really conducive to trading today. Gold especially. We only had one trade on gold overall and it was a break even. I'll get into that with the trading view in a minute. On crude oil, we had, let's go back here. We took this trade, but it was here and it was on TradingView. We took this short, stopped us out to the tick. Then I jumped on it again right here, and I ended up getting a break even. And those were the only two crude trades that we took. We didn't take anything else in here with TradingView. Well, not with DT anyway. Let's go back just a little bit more. Okay, now I was using DT Pro to go over some of the things in the lesson plan today. The leg lengths for one thing, and the slingshot for another thing. I think it was a pretty good discussion on the slingshot today. So if you guys are partners, you're gonna want to try to take a look at that when you can. Okay, if you're not partners, well, then you can go back and look at it if you become a partner. Anyway, so we really didn't get much here on crude oil either. All right, and on the ES, I believe we took a trade here on the ES this morning. Yeah, there's one there that was a break even, and I think there was another one, wasn't there? Scrolling. It's the very first trade of the day. I took it based on the ES on DT Pro. It was right here. I took it based on the ES, based on DT Pro, and it was also on TradingView, but I had the TradingView on the NQ at the time. And it was a pretty good trade on the NQ also. But I took the trade and I placed it on the DOM based on the ES right here. And we picked up 12 ticks on that very first trade. I didn't mark it on this chart. I think I marked it on the DT Pro chart. But you can see from all of that it was, well, it was not an easy day for trading. I'll say that. Okay. If I were to take little bits on every break-even trade today, if I were to take the 4 ticks that I had in profit on every break-even trade, then that would have been great. I'm going to go into all that right now, starting out with the gold. Okay. This is gold. No, this is crude oil. Okay, starting out with the crude oil. I was going to say starting out with the gold. I shouldn't stop out in gold today. Starting out with the crude. We really didn't get any trades through here. There was this one trade right here that I missed. I think, yeah, I just missed that one. And then everything turned around. You'll note there's another line down here. What this is here to show you is when the long-term trend is actually trending. If it's flat and you can't see any of the lines like right through here, if lines aren't differentiated, then you really don't want to be trading in there too much. You want to have them separated like this. If it's blue, that means it's a long-term trend is up. If it's white, that means long-term trend is down. If you can see the two lines down here, that's a little bit better trading in there. Okay, you'll be able to see the long-term trend really starts to move when they start to separate. Anyway, that was just something I threw in there last night. Now, right here was a great trade to take if you could have taken it. I was talking at the time, so I missed that one, and I missed that one, and I missed that one. Any one of those would have made us green on the day. But I missed them all because I was doing the training. So we get all the way through here, and I was training all the way through here. There was another trade here you could have taken that would have had a positive outcome. This would have been hard to not take, I'll say. for the way it came together, this the black going into the gray there probably happened at the last minute on that. Okay, and then as we get through here, this was at the end of the session. I finally took this trade right here. This was our first trade on crude, I think, was right here, and it stopped me out to the tick. And then I jumped on the second one here after this one stopped me out right here. It was still a valid trade once it came back down, and it stopped me out. I took it again right here, and I ended up getting a break even on it the second time. And that was it. That was all I did for trading on the crude oil. Yeah, you can see there were really not that many trades here on crude today. It was like that all day with all the markets really. But you see all the break-even trades I got on the ES? We had 11 trades on the ES. 1, 2, 3, 4, 5, 7 of them were break-even. Okay, if this drops down one more tick and gives an up close, that would be a trade there on crude, right? So gold. Now we can see the gold. Hang on, let me slide this over here. I don't have the question box out. Hang on there. Okay, there are no questions yet. Okay. On the gold. This is gold. Okay. We had one break-even trade here at the very beginning, and that was it on the gold. I think it should be probably here. We had one break-even trade here on the gold, and that was all we did with gold this morning. Okay. Going through it here, it looks like there was probably an opportunity in there, and nothing all through here, nothing all through here. In here on the gold, I missed this. This was after we ended this morning session. It was right here. We had a chance to take a short right there if you would have been trading still, and that was it. There really wasn't a ton of opportunity at all today. All right. On the ES now. Let's go back here on the ES and see all those yellow arrows are all break-even trades. Every one of those yellow arrows went 4 ticks into profit. Right. This was our very first trade. Now, when I first looked at it, this was actually in Q chart, and it was on a 10 range. And so that's what it looked like this morning. And go all the way back here to that spot this morning. The NQ's just got so many darn bars. Okay, this is taking way longer than I thought it was going to. Anyway, it looked a lot like this morning on the NQ 10 tick range. We're almost there. We're almost there. See all those little arrows? Those arrows that we drew on the ES chart. I believe this might have been it right here. Either that or this, one of those. Maybe it was before then. Maybe it was right here. Anyway, it was something just like that that I was looking for, and that I saw that gave the trigger, the charting platform, I mean charting indication gave the trigger, but I put on the ES and then I realized I was on the wrong market. This is Wednesday, February 23rd. Okay, so it all started right in here with the ES on a 6 range. Here, scroll back. I know I'm running out of time here. Okay, so here it was on the ES with a 6 range. This was the very first trade. We took 12 ticks in profit on that. This was our next trade right in here. We ended up getting a break even on that. Another one here, break even. Then this one, we stopped out. It didn't go 4 ticks into profit, so we stopped out. So at that point, we were at +2. Then we had another break even. So all 3 of these break evens all went 4 ticks into profit. So I could have been +14 at that point, but I was only +2. Here we went from +2 to +8. So we gained 6 ticks on this move. Then we stopped out again, and that put us at -2. Then we had a break even. Then right here, I got 1 tick in profit. That put me at -1. Then I had another break even right here. And then we started the training. So I didn't do any more trading in here for a while. There was this nice trade right here that triggered. That was a perfect trade right there that triggered during the training portion of it. And then at 11 o'clock, I started back up, and we just didn't get any more trade setups. Right, we're looking for it to pull back to the ribbon and give us a bounce, and you can see we just didn't get any more that qualified. Not until the break. During the break, there was one right here you could have taken, one right here you could have taken, here you could have taken, and it's actually given one right now. You could be long right now. And that was what the ES looked like today. Okay, so the markets they didn't have a lot of follow through today, not much at all. Really choppy looking, and not easy trading today. Most days it's really pretty easy. If we would have just quit when we got our goal for the day this morning, then that would have been awesome. But we can't do that. So if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 15th day of February, 2023. We lost 10 ticks in crude. We lost 1 tick on the ES, put us at minus 112.50 on the morning session. We did get the goal for the day, though. That's why it's a blue number. It's a blue color, not a red. Today we took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $300 a contract. I'm sorry, $300, not $300 a contract, $300 total. And we took a total of 14 trades. So on the month now, we're at $4,077. That's 1 contract, 2 hours per trading day. Over 11 days, averaging $370. We've gotten our goal on 30 out of 31 days so far this year. The one day we didn't get our goal was a yellow day in January. And we're starting this number over again. So tomorrow, this will be a number 1. We're now at 378 consecutive business days since our last red day in the room. And on the year, we're at $12,410. That is over 31 business days, averaging $400 per contract per 2-hour business day. This right here is where you want to be. All right. If you quit trading when you get your goal for the day, and you add 1 contract a month, right now you'd be trading 2 contracts, and you would only have to work 7.8 hours so far this year. In those 7-8 hours, you would have made $4,542, averaging $581 per contract per 2-hour business day. Okay. That's where you want to be. Now, if you've not taken a free trial with us, go here to mytradingiq.com. Right here, click on this, sign up for the free trial. Just fill out the form that comes out and sign up for the free trial. Right now, I'm going to be switching over to this live stream. If you go here to TradingView.com, community, live streams, go down to upcoming streams. It's right here. All right, we're going to switch over to that right now and do some more live trading right now. All right. So get ready for that. And it is 12:59. It doesn't let us do that until 1 o'clock, even actually just a little bit after 1 o'clock. So you can see as we transition from this to that right now, we're not really having anything to run with right here. The black is not in the green. The black is not in the green. And the black is definitely not in the red there. Okay. So this says 1 o'clock, but I'm pretty sure that it's not going to let me stream yet. I think it takes like almost a whole minute for it to get to the point where I can actually stream. Okay, so I'll give it a couple more seconds. I don't see any questions coming in yet in here right now. So let me take a drink. All right, I am going to start the stream. Let me see if I can click on this. Go ahead, start stream, and click on this. Okay, let me try this again. Let me refresh this. And now this, there it is. Okay. Click on that, hit share, and start stream, and close that camera. Okay, so it should be streaming right now. All right, so what I was just saying in the last session, well, first of all, if you have not taken a free trial with us and you want to take a free trial with us, go here to, and let me just post all this stuff in here for you, right? For anybody who's in here, coming in on the stream right now, on the live stream, I'll put this information right there. Okay, gotta say take a free trial. Now, what we're looking at right here, the long-term direction is the black outline right here. the black outline you see, that is the long-term direction on all three of these markets. For those guys who don't know, this is the mini S&P 500. It is $12.50 per tick, up and down. Every price movement up or down is $12.50. This is crude oil. It's $10 per tick. Every price movement up and down. And this is gold. It's $10 per tick. Every price movement up and down. If you're just getting in here right now, we've been trading already for, since a little after 9 this morning. And the day has been, well, it hasn't been a great day for trading. There's not a lot of follow through on anything. So I don't know how many trades we're going to get during this half-hour session right now, if we're going to get any, but we're going to be ready for it if we do get any. Okay. So right now, what we're looking for, the long-term direction, is this black outline right here. See how it's flat right here on gold? So you don't want to trade when the long-term direction is flat. Right here on crude oil, the long-term direction is bullish. It's going up. So you do want to trade when it's like that. And over here on the ES, the long-term direction is bullish. It's up. So you do want to trade. You want to go long when it's like that. You want to go long when it's like that. And you don't want to do anything when it's like this. You don't just want to blindly go long though. You want to wait until you get an actual trade set up. What that means is price is going to pull back down, get into the ribbon. The ribbon is this stuff right here in the middle of all this. It's going to get into the ribbon and then climb out of the ribbon. All right. So the way that this is put together, the long-term direction is the black outline. The short-term direction is the darker color, the darker background color inside here. That's the short-term direction. Okay. So what we're looking for in here is basically the same thing. We're looking for the market. It's the same thing every day. Looking for the market to go up and down and up and down and up and then down and back up. And we're looking to enter when it gets down here and exit up here, and enter when it gets down here and exit up here, and enter when it's down here and exit up here. Okay, that's what we're looking for. We're looking for that opportunity. Now, right here in crude oil, while we were not on, it did that type of movement pretty well, pretty predictably. And the only place it just about gave a trade setup was right here on this one. Okay, right now the ES right now is just about at the point where if it were to give us an up close on this bar, definitely, if it gives us an up close, I hope it's going to go down too far. If it were to give us an up close and the black were to stay in the green right here, then that would be a long opportunity. All right, now I get the feeling that it's not going to do that, that the black is going to get out of the green. See, by going down deeper like this, that means the black is going to get out of the green when the bar closes. So it's really a simple process. All you're really looking for right here, hey Joseph, all you're really looking for right here is for just the black. This is going to act as your area of support or resistance, depending what direction you're coming at it from. Like right now, it's acting as support. And you want that to act as support. You want it to bounce off of this. If it goes through it and it brings the black out of the green here, then you don't want to trade. You want to wait. Okay. And that's what's going to happen here when this bar closes. See, it's out of the green. So there's no trade there. Now over here on crude oil, it looks like it's probably going to do the same thing. I don't know. This bar could close up on crude, but I don't think it's going to. Over here on gold, I don't know if we're going to get any trades. There was very little follow through today on all the trading that we did. So just hang out and we'll see what happens. Okay. Again, if you have not taken a free trial with us, if you have not taken a free trial with us and you want to take a free trial with us, then I spelled it wrong. Great. If you have not taken a free trial with us and you want to take a free trial with us, then go to mytradingiq.com, like it says in the, I guess I can show that, right? Like it says right in here. Go to mytradingiq.com. All right. if you go to mytradingiq.com, you want to install the indicators, go to tradingiq.com, trading platforms. And if you want to subscribe to TradingView, there's a link right there to subscribe to TradingView also. Oops, there's a link right there to subscribe to TradingView also. All right, if you subscribe using that link, there's a good chance you're going to get a discount. Okay, I don't know exactly what the algorithm is for that, but I know when I subscribed through that link, I did get a discounted price. And Joseph said it made $7.59. It was demo just getting back into the flow. Okay, that's great. That is great, Joseph. So, so Joseph, what you're seeing in here right now, it's not the normal stuff that we do in the room in the morning, or that we had been doing in the room in the morning. Now it is starting to be the normal stuff that we're doing in the room in the morning. We're doing a lot more of this now because it's simpler. All right. Again, all we're looking for, the long-term direction is identified by the black outline. Okay. And the short-term direction is within the long-term direction identified by the darker color. So you're trading with the long and short-term direction, and you're looking for a pullback to the ribbon within that area. So with the black line, which is part of the ribbon, but it is the bottom of the ribbon when you're going up when the ribbon is bullish, and it's the top of the ribbon when things are bearish. In here, the black line is way more important than it is in the with the DT Pro, because it's the black line by itself that disqualifies trades. It doesn't matter if it's crunched up a little bit like this, as long as the black line is on the bottom and the black line is still in the green, then it's still a trade. Okay, that's different from the normal rules. We got to be able to see all four lines. And being able to see all four lines is great, but okay, so right here, right now, you can't see all four lines. The long-term direction is bearish right now, just a little bit, but it's starting to get bearish. If we were to get a down close on this bar and the black line stayed in the red, that would be a shorting opportunity. Okay, I'm going to bump this to a 7 range, so should have a 7 range in here. Okay, so now that's changed a little bit. So it's not going to give us a trade here. Sorry, from the 6 range, it wouldn't have either. If I bump that back to a 6, you'll see it wouldn't have given us a trade there either. The black is out of the other end. But just to be consistent, and all of them are on 7 range in here right now. Okay. Mark, did you get an answer to that question? I can't tell if Dwayne typed it in or somebody saved it in. Oh, thank you. I can't, my thing's not spread out, so I can't see on the other end. All right, so right here, that's what all this is right here, Mark. When I put the trades on, it's all right in here. Okay, that is my broker. And that broker is listed down here in the trading panel. Okay, there's a bunch of brokers listed down here in the trading panel. If you happen to have any of these brokers down here in the trading panel, even add all these down here in the trading panel, you can connect them straight to your charts. So you can trade off the charts into your brokerage account if you want to. This is mine. Okay. Just pointing that out to everybody who may be watching this after the fact. If you don't know that already, you can do that. All right. All right, so right now the ES started to move up. The long-term direction is changing to bullish. The crude oil never changed. It was always bullish in here, but it never gave us a trade setup, and the gold is still flat. So right here, I added this thing last night to help identify when the long-term direction is up and down and when it's flat. If you can't see both lines, like right here, you can't see both lines, you don't want to be trading when it's like that. Okay. When you can see both lines like this and blue is on the bottom, the long-term trend is moving up, and it's usually pretty obvious, but when it starts to get really flat like this, you're seeing it just a little bit at a time, you might think that this going up just a tiny bit right here is enough to make it an uptrend, and it's really not. Okay. So I'm always going to be trying to make things better and easier for everyone. right in here right now. The long-term trend has just started to go up. You see how we just a little separation down there. It's blue, just a little separation. You can see this is starting to turn up just a tiny bit. I'm afraid that on a pullback right here, if it pulls all the way back down and hits the ribbon, it's going to change that to flat. Okay, so I think the biggest chance we have for a trade setup right now is going to be here on crude oil, probably. But we'll just have to wait and see. Okay. Oh, you mean they're not candlesticks? That's what you're talking about, right, Joseph? You just got to get used to it. Yeah, it actually it's easier to see the information with these bars. Like with DT, you have to do a little more thinking to figure out where the open of the bar was. When you're looking at this, it's easier to see where the open of the bar was. The up and down close, all of that stuff is still the same. But note in here, we don't have paint bars on anymore. With I want to put something out there in the chat that I think I'm able to put out here. Let me see if I can find it first. I sent it yesterday to 2 people. Yeah, I think I sent it to you. Yes, here. All right. So we're still waiting for something to happen here. We don't have a trade to see how the long-term direction has moved up nicely there. Still going up here and still flat on the gold. So we're just going to wait. Most of trading is waiting. Okay, the time that you actually spend in a trade is minimal compared to the amount of time you spend waiting for a trade. So you have to have patience. Okay. So now we're just waiting. All right, we're just waiting here. Joseph, you don't have to draw trend lines in here anymore. That is one of the good things in here. In trading, typing it in here for the people who read it after the fact. In TradingView, there are no need for trend lines, paint bars, or slingshot or entry. Oh, the ribbon. All right, you will need the slingshot for entry using continuation trades, but for that. All right, everything else is all color coded. The long-term trend, the short-term trend, everything's in there to help you make an educated decision when it's time to place a trade, and a simple decision, really. You don't have to think. You don't have to draw trend lines. You don't have to look at the bar colors. You don't have to look down at the slingshot, see if there's enough separation, if the green line's too close to one end. You don't have to do all that kind of stuff anymore. Now you just have to wait. So you get down into the ribbon, is the black and the green, you take the up close. If it gets down into the ribbon and the black is in the green, you take the up close. Now it doesn't matter what part of the ribbon it touches, as long as it gives you the up close when the black is in the green. Right now, when I say up close, I mean close at the top of the bar. I guess I didn't describe that either. Every one of these bars is the same size. These are 7-tick range bars, and every bar is 7 ticks high. Okay, every single bar is 7 ticks high. So the beauty of that is, like, let me bring out an ES Dom for a second. Okay, the beauty of that is that if I know where the top of the bar is, I know where the bottom is going to be. Like this bar right here, I know the bottom is at 36.50, so I know the top is going to be at 38.25. So if I want to go long on an up close, I can put a buy stop limit order right there at 38.50, one tick above where that bar is going to close, right? And that would trigger me into the trade. I can be proactive and do that. I know that that bar is going to close there. Okay. Hello, shadows. But I know that that bar is going to close up there. So to be proactive, you can do that because these are range bars. That's why I use range bars. You can be proactive with your trading. Now, there's not actually a trade set up there, so I'm not going to do it. But if we did end up with an opportunity to trade, then we would jump into it. So far in this session, we've gone 17 minutes and not had a single opportunity to trade. It started right in here. It was getting out of everything right here, but it didn't give you an opportunity to trade there. It dropped through it and pulled back through it here. Again, no opportunity to trade. And over here, it hasn't done a single thing over here on the gold. So, like I said earlier, most of trading is waiting for the trade to set up. You know, in the morning session, it's usually a lot faster than this. And you know, sometimes it's a lot faster than this at this point. Last week, I think it was Tuesday last week, for some reason my recording cut off after like 3 minutes. But in that session, if you go out to our YouTube channel, you could watch it in the YouTube channel. I think I made like 50 to 60 ticks in that thing, and I had probably 15 trades in that half an hour period. It was jumping all around. That was when I think Powell was speaking. Yeah, Powell was speaking, I think, when and the markets just went kind of crazy when that was happening. So yeah, there was Marco. There was a lot of activity in the first 2 minutes on that day. Oh, you're talking about today? In the first 2 minutes when European markets opened today. Marco, who is in Sweden, and Mark, who is, I think, in Washington State, something like that. Mark was trying to trade the euro this morning too, but it was a different time for him. He put a trade on, and Mark, you texted me the result of your trade, and if you went short and you bought it back at a lower price, then that's a good thing. But I was doing a couple of different things when you texted me, so I didn't really get all the information that you typed in there at the time. That was Marco, not Mark. I know it's Mark did that. Marco got his goal for the day and 2 trades on the euro. I'm sorry. All right, so anyway, we're waiting for something to pull back here and give us an opportunity to trade. Now, I guess I can go into it a little bit more. I'll go into some other things while I'm waiting for this to happen, okay? Now, in here, all you're looking for is for the long-term trend to be bullish and the black line to be in the green. When the long-term trend is bullish, price pull back, get inside the ribbon, and then give you an up close or close at the top. That is where you're going to enter the trade, okay? Down here in the slingshot, now the slingshot is not part of the entry criteria for a trade, all right? But once you get into a trade, you can use the slingshot to manage a trade, right? So this is what happens inside the slingshot. Here, I'll do it right here on crude oil, right? Let's get rid of that. Just look at this. Inside the slingshot. Now, you know, the markets always do the same thing, right? They're always going up and down and up and down and up and down and up and down. Inside the slingshot, the green line is going down from overbought to oversold, and back up to overbought, and back down to oversold, and back to overbought, and back to oversold, and back to overbought, back to oversold, back to overbought. And so in these legs here, you know, we want to teach you to get in here and here and here and get out here and here and here and here. And what corresponds with that? This to this, this to this, this to this, this to this. Now that's there to help you manage a trade. Okay. Emini, I'm not sure I can do that, but it's youtube.com/CFRN. youtube.com/CFRN. Okay. If you were in the other thing over there, I can put it in here, but you're not in that one. I can give it to you tomorrow morning now, or email it to you. But that's what you're looking at, right? That's what we're looking for trade opportunities in here. Okay, so what we want to teach you how to do is exactly that. You know, and that's what we do over and over and over again. As price moves up, we look for the pullback. We find the great entry spot for the pullback, and we get in before the next leg, and we get out at the end of the next leg. Okay, like right in here, you get in down here, you get out up here. You get in down here, you get out up here. If this pulled back deep enough, you get in down here, you get out up there. All right. It's like this one right here on the up close, that was borderline in the green right there. So you could have gotten in right there for that move up. And when do you expect to get out? Well, there's a couple of different ways to manage the trade. Okay. Okay. Yeah, you said stopped out. I thought you meant stopped out. Meaning you didn't make money, but you stopped out properly. You stopped out with your trailing stop. That's good. That's what I was talking about, Mark. I thought that's what it read. And what Marco was saying is he got his goal for the day in 2 trades this morning when the European Open happened. So he was happy too. So what you're looking for here is just the opportunity to get in at the bottom and get out at the top. Get in at the bottom, get out at the top. Okay. And it happens over and over and over again all day long. The ribbon inside the short-term trend, well, it's inside both trends actually, inside here, inside the color. That's your area of support when you're coming back down from the top. You know, as it does this, when it pulls back, this pullback is going to find some area of support. Okay, and that's your ribbon. It's going to pull back and hit the ribbon, and then bounce up again, and then pull back and hit the ribbon, and then bounce up again, and then pull back and hit the ribbon. The ribbon's still going up, and then bounce up again. Okay, so you're going along from here to here, from here to here, and from here to here. All right, you see that? So it's always the same thing. And we're just providing you with a set of indicators to help you identify the next highest probability thing that's going to happen. All right, the areas of support and or resistance, and the next highest probability thing that's going to happen. Down here, look what just happened here on gold. Right, went from up here to down here. Now it really didn't move all that much, but what do you expect now? It's going to go up to here, right? Now it's probably going to go up just a tiny bit, but you can't really look at that on gold. Over here in the yes, this should move down, right? When it pulls back down to the ribbon, this should get down here into the oversold area. This on crude oil, when it gets back down into the ribbon, this should get down here into the oversold area, and then you'd be looking for an opportunity to go long again. Okay. Now I know some of you out there are thinking, well, why can't we take this trade right here? And you know, why couldn't we take this trade right here? Well, you can. There are ways to take those trades. Let me put the other piece back inside the slingshot here. Right, I'm gonna put 2 other pieces in this slingshot. Okay. Now in the room in the morning, we use the S3 line and the green line. Right, so like right here, even though this didn't hit it right here, you would be looking for an opportunity to go long and get the green line up into the cycle. Right, so in this case, it'd be the green line from oversold up into overbought. Now the green line doesn't really come, I mean the S3 cycle doesn't really come into play in here as much because we're not drawing trend lines. So we're more looking for the white line to cross over the green line in the direction of the up close. If you're bullish, then it'd be something like this right here. Okay, be something like that right there. Or right here, for instance. Now that's gonna look a lot better when it's happening from down at the bottom, like down here. Okay, like this one right here. That didn't actually hit the ribbon, so it wasn't a trade there. But if you're looking for a continuation trade, then that would have been it. Okay, if you would have done this one right here, you'd be in profit right now. Okay, it doesn't look like it's 126, so it doesn't look like we're going to get a single trade here this morning. this afternoon, but that's okay. I had a little time to show you guys stuff. Again, if you haven't taken a free trial with us and you want to take a free trial with us, then go to mytradingiq.com. It's right there on the home page of mytradingiq.com. Okay, all that stuff is in the somewhere in there. It's in the link for the well, all that stuff is in there. It's all available to you. I think I stuck it in here too. I can put it in one more time. I think they'll let me paste it in here. But that's not it. That's not what I meant to paste. Oh, okay. I see. I can't do that. I can't paste that in there anymore. Okay. I see something got moderated and taken out. And I get that. Okay. Here, I can paste that. Okay, one time. All right. So here on the crude, you know, if you'd have done the up close right here, you know, that continuation trade, you could have done that right in there. Here on the ES, you could have done the same thing. It's looking a little better over here, but what we're really looking for in here, guys, just keep it simple. I want to look for pullbacks down to the ribbon. Okay, pullbacks down to the ribbon is all I want. Okay. And that's it. We're looking for pullbacks down to the ribbon. We have just a couple of minutes left here. So if anybody's got any questions, you know, type them in wherever you want to type them in, and I'll answer your questions. I can see questions that are typed in a few different places here right now. So I'm happy to answer them while we have a slow spot. I said at the beginning of this session that I don't know if we're going to get any trades because we haven't had a lot of follow through. We did just get some nice movement here on crude oil and on the ES, but we didn't get a pullback to get into it. Right? We didn't get the pullback to get into it. I did show you how you could get into it if you want to do continuation trades, but I don't want that to be the focus of these half-hour sessions. Right? The half-hour sessions, I want to keep it simple and just take the really conservative approach, which is going to be a pullback down to test the ribbon. Okay. So if that means we don't get any trades for a half an hour, then that means we don't get any trades for a half an hour. All right. Well, we'll be doing this again tomorrow, starting at 1 o'clock. Okay, 1 o'clock Eastern time. So hopefully tomorrow we'll have some more action. Tomorrow we have, again, we have pre-market stuff going on tomorrow. There's pre-market news coming out tomorrow as it was today. So hopefully it's going to give us something more to work with tomorrow because there was just no follow through today. So you guys can anticipate all of that. And hopefully tomorrow we'll have a little bit of something. All right. And I think the clock is just about to strike 1:30, and when it does, I'll be able to kick it back out to fabulous Phoenix, Arizona, in Studio A overlooking South Mountain. All right. I don't see any more questions coming in. So guys, I'm going to wrap it up. Okay. Thank you all for coming today. Sorry we didn't get any decent trade setups. I really wanted to see something happen, but nothing did. And it's been pretty much like that all day. It hasn't been a lot of follow through on anything today. All right. Thanks for coming again. We'll be doing it again tomorrow, 1 p.m. Eastern time. Okay. We'll see you then. Okay. It's all yours, Steve. All right. I don't have audio on you, Dwayne, if you're talking. There it is. Okay, there it is. Thank you. Now we have audio. There it is. So I didn't. Go ahead.
The takeaway for today is patience and self-discipline. Okay, people sit down at their desk, at their trading platform, because they want to trade. You've got to overcome that compulsion, and you sit down to look for trading opportunities. The 30-minute stream that we do on TradingView every day is at a time of day when the markets typically are flat and quiet. And so when there's opportunity, we take it, and when there's not valid rules-based opportunity, as you can see, Michael didn't take a single trade.
I didn't. It was a half an hour with no trading. But
And
it's a good time for
he did absolutely nothing wrong. He did everything absolutely correct. He waited for a valid setup, and he just simply didn't get one. And you've got to learn to be okay with that. If your goal is to learn to trade for a living, you've got to learn how to be patient and wait for the market to present you with a valid opportunity, either long or short. Doesn't matter. With futures, there's no uptick rules, none of that. But everything you saw Michael do and use is fluid across all markets and all time frames. That includes individual stocks, crypto, forex, you name it. Price flows the same across all markets and all time frames. So what was the recap of the recap for this morning?
Today it took 2 minutes and 1 trade to get to $300 a contract.
Okay. And guys, I'll put up on the screen right here the thing I posted this morning in the discussion group. Price is trapped right here. Red and falling overhead resistance. Step line below is support. If we get above red and falling, that means institutional buyers have to commit money to the upside. It takes financial commitment for price to rise. All it takes for price to fall is for institutional buyers to hit the pause button looking for a better entry price. And at this point in time, the better entry price is down here around 40.87 where the daily BVC is. So I know you got some meetings to get to, Michael, so I'll go ahead and wrap everything up. On the ES, not much has changed since we looked at it. But see all these wicks on the upside, wicks on the downside? Those are not good trading conditions. Over here, we had a pullback, it held. We got an up close, we had blue and climbing. That was a great opportunity. Okay, it's waiting for those opportunities here where we opened last night. We're below the VBC, we've got red and falling. Price is always trying to get to a zone. If we're below the VBC, price is trying to get to the zone below. When price is above the VBC, it's trying to get to the zone overhead. You really can keep it that simple. Pull back to the VBC. Off we go. Up to that area we discussed earlier where we anticipated resistance. Because 2 days prior, there was a bearish cross that led to an extended move to the downside. First time price revisited that area, you expect it to be resistance. You've got to learn to use multiple time frames. That's really important. That daily chart, you only need to spend a couple minutes with that. You can peek at it throughout the day, but focus on your 30-minute chart so that you can see the windows of opportunity as they present themselves, like the one we have right up here. Okay. We're climbing, but we know there's potential resistance there and there. Notice how those line up. So we want to get above that. So we could probably make this window a little bit bigger. Oh, something like 41.50 up to 41.55. The high of this candle is 41.56. So 41.50 to 41.55, that's a nice window of opportunity. But you got to be patient, wait for price to get there. If you go long now, good chance you're going to hit resistance right here. Okay. That's what a window of opportunity looks like. We know there's potential resistance here. If price gets through that resistance, then we'll end up hitting the CTA long target. Already hit the short target multiple times. Dow looks pretty much the same. Silver consolidating at the weekly zone. Gold still working its way sideways, no direction. Got resistance overhead, support below. Not a market you want to try to trade right now. Crude oil went from support up to resistance that was established here, back down to the zone where it found support. Then once we got above the BVC, it ran right up to the weekly trading zone at 79.15, which when price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance. That's the same across all markets and all time frames. You saw it play out yesterday. Support, resistance, over and over, again and again. We trade every market exactly the same. If price can take out this swing low, then you got a window of opportunity down to the zone. But price has to get below this low, which will take it below red and falling. Red and falling can serve as good support because it's now directly below price. Once it gets directly below price, support, support. So if we come back down to it again, you got to see that support break. You got to get below this low right here. Then you got a window of opportunity down to the zone. Yes, still trying to trade higher. Russell headed for the zone. Hit the short target multiple times, hit the long target multiple times. Now the zone, we expect resistance there. If we trade through the zone as we spiked it yesterday, there's potential resistance and there's potential resistance. The market has a memory. The NQ is heading for the CTA long target. It's got to overcome this resistance, and this resistance to get there. From 27, we'll make it simple, from 27.11 to 27.31. That would be 20 points at $20 a point, $400 per contract traded. And as long as the daily stays trapped, it's going to be difficult trading. So if you've had a rough day, don't be too hard on yourself. Exercise patience, exercise discipline, and stick to the rules. I mean, these numbers down here paint quite a picture. Over the last 14 daily candles, the average range from the low of the day to the high of the day has been 68 points. Over the last 100 candles, high of the day to the low of the day, the average has been 80 points. Back in 2005, 2006, the average range for the S&P on a daily basis was about 20 points. And with TradingView, you can go back that far and you can see exactly what I'm talking about. To become a part of the family, to become a lifetime member with no recurring fees, no upsells, no new shiny objects to buy. Not from us, not ever. One payment, lifetime membership. 9 out of 10 new traders fail because they don't have a teacher. That's why you have a teacher when you become a member, 2 hours every trading day in an interactive environment. Putting on, taking off trades live in real time, explaining every move we make, every trade we take, and the rule behind it. While you trade along in your demo account until you qualify to go live per the 24/20 blueprint. Along with having a live teacher every day, you have access to unlimited one-on-one private mentoring. That never expires. Again, it's lifetime membership. It's the all-access pass to everything we do, everything we've ever done, and whatever we do in the future. The strategy and the indicators are fluid across all futures markets, all individual stocks, all crypto, all forex. As a lifetime member, you'll also receive the Logic 247 alerts around the clock, concierge trade alerts every evening when they're posted, access to the members only workshop on Thursday night, all that and much more. It truly is everything a trader needs, all under one roof at one low price. People in the audience today have lost more money than what it costs to become a lifetime member, with no recurring fees and no upsells. Once you become a passport holder, that is lifetime membership, and there's no fine print. It really is that simple. But what you have to ask yourself is, are you willing to do the work required to become someone who can be consistent? That's why we invest our time, money, and resources in you for 5 consecutive trading days, so that you can make a well-informed and intelligent decision before you ever spend a dime. Your free trial journey begins by going to mytradingiq.com. It's right there at the top of the page. So we'll wrap it up with our good word for the day. We've been talking about pruning the last few days. Today, we're going to talk about having peace of mind. Psalm 29:11. The Lord blesses his people with peace. Everybody wants peace of mind. Whether you're a business person facing the pressure of deadlines, a homemaker trying to round up kids, or a student trying to make it through the university term, everyone wants peace of mind. But most of us experience more stress than peace. How acquainted are you with stress? Here's a little quiz. Complete each of these sentences with the appropriate word. I'm ready to throw in the I'm at the end of my I'm just a bundle of my life is falling. I'm at my wits. I feel like resigning from the human. How'd you do? If you answered towel, rope, nerves apart, end, and race, give yourself an A+. Most of us have muttered these words so often that they're almost second nature. Stress is a regrettable fact of life in our contemporary world. Sales of sedatives are at an all-time high, and books on peace of mind become immediate bestsellers. We are warned that too much stress is unhealthy. So what else is new? We've understood that for centuries. Thousands of years ago, Solomon wrote in Proverbs 14:30, "A heart at peace gives life to the body." We know about stress, but where can we go to find peace? The simple answer is God. Here's 2 promises. The Lord gives strength to his people. The Lord blesses his people with peace. And don't worry about anything. Instead, pray about everything. Tell God what you need and thank him for all he has done. Then you will experience God's peace. And that's the peace the world cannot take away. That's Philippians 4:6 and 7. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.